Well, let's talk now to Matt Maley, who's Chief Market Strategist at Tabak & Co. Good to see you again, Matt. Welcome back to the programme. So let's talk about oil prices first. And often when there's instability in the Middle East, we see oil prices rise, don't we? But they've gone lower. So what's going on?
Well, I think the main thing is that what's happening here with this response from Iran yesterday, they told it was telegraphed in advance, and so it was pretty feeble, to be honest with you. So people really think that, okay, Iran's response is not going to be a big one. They're not going to mine the Strait of Hormuz. The Strait of Hormuz is not going to be shut down. And so this has got people thinking that the odds that we'll see a big spike in oil is very, very low, and therefore they've fallen back down to the levels that they stood before the initial attack came from Israel on Iran about 2 weeks ago.
So we've seen the markets jump on the news. Is that why? Is it down to oil?
Well, that seems to be the main reason, yes, I think so. But it's interesting that as much as the market has rallied, it has not skyrocketed higher. And even though we're pushing up to near the all-time highs from earlier this year, it's still, not up that much on the year. So and I guess my point is that there are still other headwinds that we have to face in the marketplace. The market is still very expensive. And so people are starting to figure out, is there going to be a lot more upside from here, even though this geopolitical issue seems to be calming down?
Well, headwinds on the mind of Jerome Powell, no doubt, as well. We've heard from him saying that rate cuts could wait. What do you make of his comments?
Yeah, I thought they were important because, it's interesting. The last couple of days, we'd heard from other members of the Federal Reserve saying that we could see a rate cut in July. That seemed to be taken off the table by Chairman Powell today, although he said it's still a possibility, but they always say that. So that seems to be calming things down in terms of getting excited about the Fed being more aggressive. I guess the point is right now, though, is what people need to be looking at is what's going on in the economy overall. It is still still slowing, even though it's growing. That rate of growth is slowing, and earnings estimates in the U.S. continue to come down. And so with the stock market trading at more than 22 times earnings, it's tough to think that it can push or skyrocket a lot higher from here.
I mean, he's got a lot on his mind, though, hasn't he, Jerome Powell? He's got inflation, this geopolitical uncertainty, and we haven't spoken about them for a while, tariffs. There's a lot to factor in here.
It's so funny how the tariff issue just suddenly disappeared after being the most important one anybody could talk about for many, many weeks, if not months. And yes, that's going to come right back in because we do know that a lot of the impact of those tariffs haven't been felt yet. So if inflation is going to pick up, it's probably going to pick up later, not sooner. Or when I say it's going to pick up soon, that means in terms of July, August, September. And we weren't looking for it so much in May and June. So these are the things he's got to be concerned about, even though oil prices have come back down.
Matt, great to talk to you as always. Thanks for coming back on the programme. That's Matt Maley from Tabak & Co.